we're starting off right now with shaping the future of financial services with AI. We have Khoury, we have Lisa Besserman, we have Engel, and our moderator is Nawfal.
Great, thank you so much. Hello, everyone. What a great day. Thank you for joining us for this panel, where we will be diving into how AI will be shaping the future of financial services. Over the last 10 years, the financial services ecosystem has undergone a lot of change. How will the next 10 look like? Today, we hear about the potential of AI to reshape everything from personalized banking and fraud detection to algorithmic trading and automated underwriting. What are the opportunities ahead, and what should we be on the lookout for? How can we tap into them while ensuring data privacy and managing risk? I'll be your moderator today. I'm an MIT alum from 2011, course 14 and 18, and I'm the co-founder and COO of Notabene, a data platform that helps banks, fintechs, and exchanges transact safely with crypto assets. Joining me today is an incredible lineup of speakers who'll be sharing their unique insights. Monica Brand Engel, co-founder and managing partner at Quona Capital. Lisa Besserman, Managing Director, Head of Innovation and Product Strategy at Chase, and Khoury, Managing Director and Partner at BCG. Please give a round of applause. Let's kick off with each of you introducing yourselves and what you're currently focused on, particularly with AI. Joe, do you want to kick that off?
Can you hear me? Yeah, I think you can. So I'm a partner at BCG, and I lead the AI in financial services. Most of my focus has been recently primarily on the insurance sector within financial services more broadly. And more specifically, I lead a lot of our work with large organization around strategy, deployment of large AI models and applications.
Hi, everybody. Thank you for joining. I know we were competing with Spotify, Google, and Microsoft, so you guys are awesome for being here. My name is Lisa Besserman. I am the head of innovation at JPMorgan Chase, focusing on Chase operations. And so in my role, my team, we evaluate, we discover, and we work with startups and emerging technologies to find ways to solve problems, whether it's for our 84 million customers or our 40,000 service specialists. And so we really lean into AI for that personalization to create efficiencies, but also solve problems at scale for the bank. And fun fact, I was rejected from MIT for undergrad, so joke's on you, MIT. I'm here.
Good afternoon. I'm Monica Brand Engel, co-founder and managing partner of Quona Capital. Quona is a venture firm focused on fintech for inclusion in emerging markets. We focus geographically on South and Southeast Asia, Latin America, Africa, and MENA. 790 million assets under management, 70 companies. And AI is a new area. Our theses are continually evolving, but we actually presented this morning as some of the use cases that have been that have manifest in these markets, particularly around neobanking, around fraud detection, and around e-commerce. But look forward to the conversation.
Great, thank you all. We're going to start with talking about innovative AI use cases. Joe, if you can share what use cases you're seeing in the insurance sector and broader financial services.
Yeah, a lot of interesting innovation. What I'm seeing, I was talking to someone earlier, I've been in the technology space for a while, but I've never seen a technology that's getting so much attention from board members and from CEOs of companies, especially large companies. A lot of the discussion has been around how can I leverage AI to accelerate my technology implementation, and it's been fascinating. In terms of innovation in the insurance space, seeing a lot of work around servicing, customer service, anything related to call center, a lot of very interesting application in that space, as well as claims. Claims processing, generation of claims letters, accelerating the actual processing of any information. A lot of great results we're seeing. It's not easy, and we can talk more about that, but it's been amazing innovation in the space.
Great, thank you. And Lisa, What are you seeing at Chase and more broadly across the institutional banking sector?
Sure. So first, I want to say that AI in banking is not new. There's been a lot of usage of different forms of AI for decades in the financial service industries. Like from the 90s, Visa was using neural network-based systems to detect fraud for credit card. And so we understand JPMC has been developing AI for many, many years, and we understand the value of the technology. The interesting thing is the evolution and the acceleration of the technology and the ROI that presents. And so within the next year or so, we estimate that there will be about $2 billion in benefits just for JPMC. And a lot of those benefits will come from fraud. So fighting fraud, fighting fraudsters, fighting nefarious characters that are taking advantage of our financial institution. There was recently a study from NASDAQ, from their criminal reports division, saying that over $3.1 trillion in illicit funds has gone through the global financial system. And that's only what we've been able to detect. So when you look at the impact that AI has, not only to fraud, to be a fraudster, to scam for cybersecurities, but you have to use that to combat fraud. And so we are, putting a lot of effort into combating fraud and making sure that we are doing right by our customers and creating safeguards. And, one of the biggest investments we're making is KYC, which is Know Your Customer. And so we're able to process 90% faster when it comes to understanding, monitoring, onboarding our customers to make sure that they are doing the right things. We're doing that with 20% less human capital, and it's about 230 applications that will be processed a year. So that's one big area that we're leaning into AI. But there's tons of use cases around a big company like JPMC. So we're seeing it in operations, we're seeing it in trading, we're seeing it in customer servicing. In our investment bank, we have our analysts utilizing AI and ML to research potential investments, to make better decisions. We have them using AI and ML to create personalized and customized profiles for their clients, research reports. So the use cases are vast, and we're only just starting to see how they can scale and the impact that they can have. But for me personally, seeing how AI can safeguard our customers against fraud and scammers and nefarious characters, that to me is the most important thing. And I'm really excited to see how we're fighting fire with fire and leaning into the tools at our discretion to help safeguard our customers.
Yeah, thanks, Lisa. I think I've also seen some stats similar to the NASDAQ one. And I think in terms of illicit finance, it's equivalent to 2% of global GDP. So that's huge, even just thinking about that in particular, let alone everything else that you also shared. Monica, you have the unique vantage point of meeting startups globally. What are the AI innovations that you're seeing on the ground with fintech startups?
Yeah, very similar, and I'll pick up on some of the great comments made. This morning, we actually had a panel where we brought in examples from each of our regions to talk a little bit about the use cases. So, and it was a result of the research we had done as we looked deeply, double-clicked on AI and seeing how it's being integrated into our models. So in three core areas is where we see the general innovation, and I'll talk about some specific industry examples. So the first one is really around automation of kind of paper and people-intensive services. It's really on the back office side, so it's a cost savings. Our CEO of Khoury, the challenger bank in Mexico, talked about spending roughly $500,000 a year on business process outsourcing functions and how much was saved by converting a number of those functions applying AI. So we already see very meaningful cost differences on the automation piece. The second is on personalization, and this really idea of being able to tailor products. And if you think about the work we do, our thesis is around a mass market, that there's just an enormous underserved emerging consumer and small business. And the reason why they're underserved is that it's not very cost effective for a bank to serve them. And so the first use cases we saw were sort of generic, I call it pure play, whether it's lending, other personal financial management. And what AI has allowed these companies to do is to really tailor these services. Interesting, you mentioned insurance. One of our portfolio companies, after working in B2B e-commerce, is now looking at the insurance sector to be able to accompany the sales rep and actually allow them to offer a more diversified offering to their end clients. So it's not replacing the sales rep, it's just making them much more powerful, much more versatile. And the last area is really on the fraud area, which Lisa talked about. We heard this morning from a company called Bureau, which is really using AI on fraud management. And to pick up on these crazy stats, what he said this morning, I thought it really much is reflected on that data, that fraud is now an institution. It's not more the random person who's sort of taking advantage of a weakness in the system. It now has become industrialized. And what Bureau is trying to do is actually kind of fight, sort of fire with fire a little bit, building a robust system that can detect through different kind of pattern recognition and language models, being able to use AI to more systematically uncover, for example, someone who changes their identity and applies for the same product, but maybe they're using their WhatsApp is similar, or another digital marker would be that they change their email. So they have digital markers that allow them to predict using AI more effectively. So it's not just the fraud detection of yesteryear, which again has been in our markets through credit scoring, et cetera. It's actually really leveraging the technology for more robust systems.
Thanks, Lisa. Let's dive into the challenges in terms of adoption. Joe, do you want to kick us off?
Yeah, I'll maybe get at it from an enterprise perspective. I think I see mostly three challenges. The first one is data, right? This is the fuel of any AI model. And it's been very difficult to get the data in order in order to build those sophisticated models, especially in large companies where data is siloed. You don't have the right metadata tagging, the right lineage, and it's been a struggle. So it is something, I think, and my advice is, before you even deploy those models, how do you make sure your data infrastructure is ready to do that? Another challenge, many companies it's easy to build a proof of concept in AI, right? It's not difficult, it's getting easier even. There's so many tools out there. Getting a product or use case from proof of concept to production has been very challenging. Getting accuracy up, from 80 to 90% is very, very difficult. And that is something that I see as a big challenge, especially in financial services industry where, accuracy matters, right? There's regulation involved. What level to get to become comfortable with? And that is a discussion that I think that's a challenge. So I think the models will evolve. I think the technology will get us there. It all goes back to my first point. You need to have the right ingredients, the right data to be able to get to that level. And then the third big challenge is around people. In fact, I would say that's the most important challenge. I see a lot of great tools, great solutions, applications, but also employees are not using them. So embedding AI within the workflow, embedding AI in everything, right, is a task. So we always say 70% of the value will come from people really believing in it. And if we're not getting people, no matter how good the technology, is not going to go anywhere. So.
And do you think that the people part will also help with the second challenge in terms of how quick you can move from POC to deployment?
Absolutely. It's critical. It's critical.
Great. Thanks, Joe. Lisa?
Well, Joe took a lot of the good answers, but I would say challenges in large-scale deployment would be hallucinations, governance, and accessibility. So for hallucinations, there's plenty of instances with LLMs where there's just unsupported or incorrect information that's being disseminated. And in highly regulated industries like financial services or other highly regulated areas, you have to rely on that data and you have to rely on that output. And it needs to be, the means, how the decisions are made, needs to justify the ends, which are the results. And a lot of times LLMs operate as these black boxes with nebulous information. You don't know where the information is coming from. And so that lacks accountability, and it's very difficult for us to gain that wide scale adoption if we're unable to be accountable and we don't have that transparency. So I'd say hallucinations are a very big challenge when it comes to AI systems. Next is governance. As we know, there's a lot of regulatory issues. The landscape is constantly changing, and yes, there are ways that your companies can incorporate different governance structures and frameworks, like data use council, or working with your controls partners, your compliance partners, your risk partners. All of that is a given. One of the things that I've recently learned about is deductive AI. So I just want to ask the group, so how many people here know about generative AI, Gen AI? Raise your hand by show of hands. Okay, most of the room, of course. How about deductive AI? Cool, only like 3 people. Awesome. So I recently learned about deductive AI, and I think this is going to be a tool that we're going to be learning about in very, very quickly. Essentially, what deductive AI does is it solves problems using predefined rules and logical reasoning, meaning the outputs are only generated by a very established set of principles. So think about medical diagnosis, like medical diagnostics. Deductive AI can create those diagnoses only based on the rules you're giving it. So clinical data, guidelines, rules. Whereas generative AI, it's kind of like a black box, can be pulled from anywhere. And so the really interesting opportunity here as it relates to governance is being able to pair deductive AI with LLMs, and you're creating contextual LLMs, which is a hybrid model where it's more predictable. You can find your sources, you have knowledge graphs, and it's really easy to use and to point in terms of the transparency and the accountability, and you know that the data you're getting is correct. So there's, this goes back to hallucinations as well. So I think incorporating deductive AI with LLMs is going to be a really big opportunity for us to safeguard the future of how we use these, AI and different AI models. And then lastly is accessibility. Everyone here kind of takes AI for granted because it's, this is our world. We know it, but it's evolving every day, and it is still very esoteric to the masses. And so the onus is on the companies and the enterprises to educate, to upskill their employees, to teach them about AI, to teach them, to empower them to use the tools, because they are changing, they are evolving every day. And I think that, anywhere from frontline specialists all the way to C-suite execs, you are going to have AI embedded into your lives, into your careers. And so the opportunity is for us to be able to create upskilling frameworks and courses and classes. One of the things we're doing is creating prompt engineer classes. We're creating onboarding systems for new employees. And so it's really important for us not just to have the tools, but to empower and educate every single employee on how to use the tools in order to gain the benefits of AI. So I'd say those are the 3 challenges, but also the 3 opportunities that we can see that will only continue to evolve as time goes on.
Yeah, thanks, Lisa. And I guess, Joe, you're taking note on the people.
Yeah.
Yeah, and Monica?
So maybe to build on, because I think there's great answers, I'd say 3 things. One, we actually did a survey to ask, one, how many of our portfolio companies, how important is AI in terms of their past development as well as in their future? And it is definitely much, and to Lisa's point, a new technology that people are beginning to experiment with. It's still kind of less than 10% of capital expenditure. But if you ask them going forward for the next 12 months, the numbers switch, and it's about 51% are actually expecting to make significant investments. And when you ask them what are the challenges they're trying to tackle, they name 3. And I'll just say the emerging market nuance, because some of them were picked up by both Joe and Lisa. The first is talent. And I think in addition to generally, whether it's prompt training, the way Lisa said, or other technical training, it's just the understanding that the cost of having sort of highly trained technical workforces is a limitation in many of our countries. Not in India or Brazil, but we also work in places like South Africa or Mexico, where it's growing, but it's still a gap. The second that I think, again, maybe is more an emerging market around the data access is around rules in many of these countries. Data now is patrimony. Many of our companies can't use Amazon World Services unless they host locally. So that actually becomes a really different challenge in terms of what's the capacity locally to begin, being able to store that data and access it. And the kind of, this idea of being spoiled, we're very spoiled in that We can, with a simple internet modem, access vast amounts of technology. And so this idea of cloud computing, while it is available in our markets, there's now regulatory restrictions to how it can be used, especially when you talk about financial services. So that's another kind of a very big challenge. The third that we didn't, again, and it probably is present here, but the whole issues around privacy. Again, governments have very different regulation around, how they view consumer, who owns the data, and just navigating that as you build these AI systems. I like the seductive AI because maybe you can create some parameters around how to allow them to really leverage this technology without running afoul of some, I think, consumer protection regulation that is evolving in our markets.
Thanks, Monica. You already touched on, of course, that financial services is one of the most regulated industries, but so are things like data centers and so forth. And you also touched on data privacy. I wanted to give a chance to also the other panelists to basically share their thoughts around how should we think about innovation in AI within the context of a regulated industry? How are policymakers, or how can they continue to promote its adoption while also creating appropriate safeguards?
We're regulators. Doing started.
How much time we have?
Keep it brief.
Look, I mean, it's an interesting question because what we're seeing in the market, from a regulatory perspective, the regulators are truly playing catch up when it comes to, especially in financial services. You're all familiar that probably the most recent big regulation happened in Europe, the EU AI Act. And even that act was a little bit toned down in many ways. If I think about the U.S. specifically, at least the way we're seeing things evolving more on a state level, or industry specific, insurance regulator versus financial services more broadly, it will be very different. A little bit like GDPR and privacy you had in California, CCPA, and others. That's at least how we're seeing things. I really believe if you work for a company or you're starting your own business in AI, the regulators want to hear you. That's what they don't know what direction to take. So the more private sector can influence the right direction, I think the better is for everyone. I don't think it's defined. I haven't seen yet. There's a lot of talk New York DFS thinking about it, but nothing is yet defined. That's how it's defined.
Great, thanks. And Lisa?
So I come from the startup world originally. I'm a recovering entrepreneur turned venture capitalist, now an innovation executive. So my world has changed vastly from throwing a bunch of stuff to a wall to seeing what sticks to being beholden to regulations and compliance and risk. And I think that there's a fine balance between regulations and innovation, and it's about fostering the balance between the two, because regulations at its core exists to protect the public, to protect consumers, to maintain market integrity. And innovation should align to those principles, first and foremost. So I think finding that balance between the two is important. So it's important to move fast, it's important to learn, it's important to iterate, but it is fundamentally important to take regulations into consideration. So I think that's one thing to keep in mind as we're doing this. Another thing is building relationships and having open and consistent dialogues with policymakers, with regulators. A lot of times we know a lot more, or the experts know a lot more than the people making the policies. And so the responsibility is on the people who know about the technology to be able to provide insights while also understanding the regulatory concerns that do come from the public, that do come from the policymakers. So that's another thing. Creating safeguards, so making sure that AI is ethical and transparent and accountable. That's just like another way to help. And then I think the last two, I would say, one, and this is probably the most important, is taking a consumer-centric approach in whatever you're developing and making sure that you're developing for the person in mind, for the end user in mind, whether that's, employee-facing back office or consumer-facing front office. So it's always developing with the consumer in the center of that principle. And then the last is just future-proofing. and understanding that the landscape is consistently changing, and we need to be flexible in the way that we build our frameworks to ensure that as regulations evolve, which they will, which they do with every technological advancement, just making sure that we are future-proofing for that, and we are being flexible to enable that our frameworks can move at the pace of the changes in regulation as well.
Great, thank you. And Monica, anything else you'd like to add on the regulatory side?
The only thing I would say, one is this, and it's very common in emerging markets, creating these regulatory sandboxes for experimentation. So because it's such a fast-moving technology and we don't really know the unintended consequences of certain rules and frameworks, there are a lot of work around creating these regulatory sandbox, allow some not only experimentation but dialogue, so you have that exchange and you can kind of iteratively revise. I think the second piece that I guess is a benefit of being an emerging market, we're not displacing infrastructure. So if you look, I joke about FedNow, instant settlement. I mean, that's what it's called here in the U.S., but FedNow has been like years in the making, whereas we already have it in India and Brazil. So I think in one ways, there's a way in which these markets are leapfrogging because they don't have the sometimes political blockages that happen when you're trying to adopt this new technology.
Great, thank you so much. And I also wanted to echo, similar to what the three of you said, but coming from my industry where we've been helping regulators understand blockchain and digital assets for years, we meet with regulators maybe twice per week. We've been involved in multiple sandboxes. And I must say that policymakers love interacting with the private sector. They love learning because ultimately we're all building this together and there are no best practices yet. And it requires a lot of dialogue. With that, I'll jump into my next question, starting with Joe. What are some gaps and opportunities beyond current AI use cases for financial service firms to leverage AI in the near future?
Yeah, so in general, the way I see AI evolving is a little bit as, there's three major archetypes of AI products, and hence that where the opportunities will lie. You've got the big tech firms, software providers, especially in financial services, which will enable more and more AI features in their products, and that is something which is great. We need to see more of that. I think if you have one of those tools, use them. The second category is more around tools that do specific work or specific use case. I think that's going to be a challenging word because personally, I haven't seen yet a tool that is plug and play in AI. There is so much that goes into it, whether you're training it in your own internal data or we talked about the people piece. It's just that archetype, I think, over time we'll see an evolution to be not just product and services coming into it. And these are, things that can improve efficiency. They have benefits, but it's not the 20, 30%, 50%. I don't think this is what we will see in that second archetype. The third archetype, that's where the big money is. That's where the $2 billion savings and all these big numbers is when you really take an end-to-end process, whatever that is, and truly innovate. Not only AI, RPA is still good, machine learning, generative AI, deductive AI, all these new tools, how do you place them end to end, look at it? That's where you see the benefits. I think that's the opportunity. If whether you work at a large company or you're a startup, take a step back and think about it broadly. Think about how you can solve those pain points across the value chain. So that's kind of a little bit how I see the opportunities. Yeah.
And with the third opportunity, how far do you think we are from being there?
I don't think we're far. I think the technology is there. I think it's willingness to take it. And, it's not easy. And obviously, especially when the larger the company, a lot of silos. But the technology is there. Yes.
Great, thanks. Lisa?
I believe that AI will be used by nearly every banking employee around the world as in the short to medium term. And we're going to see the most immediate efficiencies as it comes to operations. And I think one of the challenges is taking a look at, and operations in banking is vast. And so taking a look at every single process and trying to evaluate where AI can be interjected to create efficiencies. and to solve more problems and to enable people to move faster and do more. And I think it's also about approaching it with a zero operations mindset where we can reduce human error, increase automation, increase productivity. And I think, one of the challenges, and I believe I don't believe it to be true, is people think AI will take our jobs. And if you've looked at, the dawn of time and all of these technological revolutions that have occurred, it's actually created a net positive impact when it comes to job creation. And like Sam Altman was talking about how, when technology took us from the Stone Age to the agricultural age, technology took us from the agricultural age to the industrial age. Technology is now taking us from the industrial age to the information age, and then now we're at the intelligence age. And it's the challenge is getting people to use AI and see it as a tool. I think a lot of people see AI as like this end-all be-all. It's either going to solve all of our problems or it's going to create the destruction of the world like Terminator. But the truth of the matter is AI is a tool. And that tool is just human intelligence augmented. And so you need to find the connection between the humans and the tool in order to get the most benefit from it. And so I think those are the gaps and the challenges, but also the opportunities and really approaching AI as a tool, but a tool that is directed by humans and teaching humans how to interact with that tool.
Yeah, it all goes back to people and training and retraining, I guess.
Well, one thing I want to add, I had dinner with a friend of mine, and thank you to my partner who sat through like an hour of AI talking. But we had a dinner, and he's a consultant at Capgemini, and we were talking about how the future of AI will change how people go to college and what they major in. And so, up until recently, like the safe job was like software engineers, got in programming, all parents were like, go do, become a programmer, become a software engineer at that time. And he was saying, this is his theory, is that the roles that will be in the most demand in this next generation are going to be degrees in anthropology and degrees in philosophy. And I thought that was really interesting. It's like, it's roles that humanize AI and the robots, and I just found that to be fascinating. And he has a lot more information than I do, but I was surprised by that.
Well, interesting. I guess MIT will have to add anthropology. I don't think we have it as a major. Monica?
Yeah. I think it's interesting what we're doing. Remember, I mentioned that survey showed that there's this real exponential investment plan among our companies, and as we look for new innovations, we have two theses. One is that we do believe that category 3, that $2 billion or whatever opportunity of sort of end-to-end AI applications are out there. The question we have is, how does it differentiate themselves? Meaning, how do you create a service, a business that actually can just avoid the replication? And we already see it somewhat now. We just made an investment in our first Middle East investment, kind of like a modern treasury of the Middle East, really automating a lot of the invoicing, receivables financing, the pain points that small businesses don't have the ability or patience to really, or infrastructure to really implement. And so for AI, as we begin automating these end-to-end processes, really the question is, how defensible is it, and how can you really make sure, and what do you bundle it with to really become a compelling business opportunity? The second is on delivery and go-to-market. So, example, one industry verticalization is like the toast of Africa, where you are helping, people in the food and beverage or in the hospitality industry really automate, again, a lot of their, the parts of their businesses that, again, have been very manual or people intensive. And what we found was actually if you integrate that service into a point of sale, for example, or another payment mechanism, it's a much stickier proposition. So back again to this AI, the question is, what will it be bundled with? Will it be standalone? So some of the pipeline development we're doing is really on, again, looking which of those processes really make a compelling sales opportunity, and how do you deliver it in a cost-effective way so it can be defensible.
Great, thank you. And Monica, you spend all your day working with startups in emerging markets. Any additional insights you'd like to add that are specific to those markets?
maybe what I would say, I made an allusion to it earlier. What we're seeing is, and in fact, we actually have this new area called global. We're seeing the boundaries really dissolve. So actually, I just, in fact, someone who walked up to me today after the morning presentation, he's running an Indian company. He's actually based in New York, MIT grad, who is very interested in building, in this case, it was around the financial service and collections area, building a technology, an AI-driven technology that not only will be adopted by some of those banks in India that maybe are newer on the AI journey, but know, as Lisa said, that they have to figure out how to integrate this technology into their business. But he built the stack so that it could also be used in the U.S. And so it's interesting, even from the design stage, that he's already thinking about these markets as two of his most interesting markets, again, even in terms of the tech stack design. So I would just say that for us, the boundaries are dissolving. One of the theses is that what you can learn comparing across markets is actually much more powerful than necessarily the specifics that differentiate them.
Great, thank you. Well, we kicked off today saying that the next 10 years in financial services are going to look dramatically different. As we come to a close, I'd love to ask each of you to share final words. It's 2030. You've been asked to come back to this panel and to this conference. What did we get right and what did we get wrong?
I think the technology we're going to get right. I have no doubt. The innovation that we're seeing is impressive. That will continue. In fact, it will accelerate, moving from large language models to smaller, more efficient models. Innovation on the device, that is something I think we'll get right. I think it is going to be fascinating to see the evolution over the next 5 years. I just go back to one theme. What we may get wrong is really the human aspect of this whole thing. And do people really want it? We talk a lot about productivity. AI will improve productivity. But is it really that's what we're looking for? Do people always want to be more productive, or do they want to be just happy? That's kind of the question that we're wrestling with. I'll give you just an example. A company I know very well, they deployed AI in the call center. And they were able, it was fascinating, they were able to automate, it's an auto insurance company, and they were able to automate about 80% of all tasks. So as a call center agent, you go, you sit, wow, most of the tasks, especially the easy one, change of address or, any easy request. But then what they end up with doing 20% of the time is customers yelling at them. So as a call center agent, do I really want to go to work every day and have people yell at me? Actually, this true case, almost half of the call center agents left because of that. And that's kind of the question I ask myself, like, okay, it's great, all this innovation, but what does it mean to us is going to be a big one.
It's definitely a very philosophical question as well, but a very critical one. Yeah, thank you, Lisa.
So since we're competing with Spotify, I'd like to open that up to like a more general idea of, where we're going to get, what we're going to get right and wrong in 5 to 10 years. So I think what we're going to get right is advancements in medicine. So like when you pair an oncologist with AI, the detection of cancer is significantly higher. You're seeing advancements in for paraplegics or for learning disabilities. So I think as a whole, the biotech, the med tech, the health tech, that industry is going to be revolutionized, and it's going to change the way that we interact with medicine, and it's going to essentially create more longevity in life. Also, obviously, enhanced productivity and efficiencies that we're going to create. And then I also think that there's going to be a better collaboration between humans and AI, because back to the whole point, it's human intelligence augmented, and we need to learn how to work with the tool. So I think that there's going to be a lot of reliance and a lot of education based on how humans and AI interact, whether that's creating your own AI agent to talk to another AI agent, which I'm very excited about. But I think that there's a lot of use cases for people being able to collaborate with AI more effectively and more efficiently. I think what we're going to get wrong is there might be an over-reliance on AI and a loss of skills because the AI is going to be doing a lot of the brain power and the thought for us. So I think that might be something that happens. I think ethics and privacy oversight is definitely going to be something we get wrong. There is algorithmic biases. There is going to be data breaches. There is going to be privacy concerns, and the public will eventually be let down, as it did in the age of data when we see all of these breaches and Cambridge Analytica, et cetera. And I think the last thing is just could potentially be short-term economic issues for the more vulnerable communities that don't have access to the upskilling, where their jobs will be directly impacted by AI. And that's where the onus and the responsibility is on the policymakers and on the big corporations to make sure that these communities are not left behind and that we're able to provide them the tools, the resources, and the skills so they can be a part of this AI revolution. And I think short term, that might create some economic disparity and a much bigger wage gap that I hope will not be a long-term effect.
Thank you. A lot to think about. And Monica, last but not least.
Yeah, I'll just say two things. On what we'll get right, I am so inspired by not just the breadth of what this conference covered, but even the types of voices that are bring to the table. I think there's been a very open, engaging approach to how these businesses are getting developed and how these technologies are being developed. So I that there's a voice for a Kenyan company and a Mexican company along some of these phenomenal leaders, I think is a really good sign, and just really shows the power of this technology. I think what we might get wrong, I think Joe alluded to a little bit, is there's two core areas. One is certainly on this cost optimization and cost savings, but the power of AI in my mind is really this augmented. Remember I said that area number 2 for our research was on diversifying and personalizing financial services so they're just more customer centric. And I think it takes a little bit more work, and the ROI isn't as immediate, which is why I think the cost, everyone's focusing on the automation and cost savings. But then I'm worried that that's where the bulk of the business models will be focused, when I think the real power is on personalized, customized service.
Great, thank you. Well, I've learned a lot, and I'm sure everyone else here. Please, everyone, give a big round of applause for our amazing speakers today.